Hi, everyone. Welcome to Forbes Talks. I am here with Michael del Castillo, Senior Editor, Crypto, Blockchain, and more. Michael, welcome.
It's a pleasure. I'm liking this tradition we're developing.
Every week, and this week we're talking about VCs.
Yeah. Crypto VCs,
Crypto
to be specific.
VCs,
Yes.
which is is there a specific subset of crypto VCs versus VCs that said, I want a piece of that?
Great question. Yes. There are two very distinct categories. Well, three. The third one is VCs that do not invest in crypto. They're definitely.
We shall not talk. Shall not be named.
There are very legitimate players in the space who completely overlook the space and are not interested in it at all. Smart people that do not invest in crypto. There are traditional VCs that have been around for decades, in some cases generations, way before crypto, that have gotten into crypto and in some cases even reimagined their entire existence around that investment opportunity. And then there are crypto native VCs. These are VCs that were launched after the birth of Bitcoin. They are specialists, they are purists, they understand the technology like a fish in water. And
did they accrue their wealth? I mean, because oftentimes a VC, they've accrued their wealth through crypto, which of course gives them both a knowledge and the ability to get in on some of these deals.
I wish I could say yes.
Okay.
Often, yes. But often the GPs of these firms came with their money already in hand, if you understand what I'm saying.
So I think I do. So let's talk about what's happened in this space, because of course last year buoyant.
Yeah.
Here we are, January 2023, not so buoyant. So has that been basically the trajectory?
Yeah, last year started off with a bang. We saw, I think it was the biggest crypto VC round in history. It was a massive $500 million investment at I think, $23 billion valuation at a little company that you may have heard of called FTX.
How did that turn out?
The entire industry was on fire at that moment. FTX was sort of seen as the poster child of the industry. The CEO, Sam Bankman-Fried, was talking to elected officials, politicians in the United States and elsewhere, described himself as regulatory compliant, above the table CEO, running a regulatory compliant above the table institution. Now, the verdict is still very much out on exactly what happened, but FTX no longer exists.
And he was an investor himself. He would have qualified.
FTX had
VC.
a venture capital arm that was among the top 5 VCs in the world in crypto. So not only do we have to take, in a way, I think we need to take the $500 million investment in FTX off the table when we're counting VC investments in crypto in 2022. But we also have to take the FTX venture capital firm off the table as far as sort of some of the interesting milestones that happened in 2022, which I think raises an interesting dilemma when measuring VC performance in 2023. There's some heavily conflicting reports about how successful, how pervasive crypto VC investing was in 2023. There's some that call it a record year.
Last year, you mean, so 2022.
Yeah, they're literally calling it a record year. And there's others that say it was a complete oblivion and a waste.
I guess it depends what you invested in, of course, right?
So I think it depends on if you count FTX. Honestly, I think that like the research firms that are claiming that the VC in crypto space in 2022 was a success are counting that $500 million, which was a huge percentage of the total.
Well, we're still seeing fallout, and I know there's been, certainly we've had some coverage of Binance, and I'm sure there's more to come in terms of the fallout of what happened with FTX. But is it fair to say that the crypto VCs, was that the smart money, and the VCs investing in the crypto space were sort of like followers?
There's some controversy around that. I do think that there's something to be said for trusting a fish to talk about the water that they're in. That it's their native environment. They know what's going on there. but they also sort of lack the context of the terrestrial world, right?
Right.
And
I don't want to use the word Kool-Aid and fish.
yeah,
that kills you right there.
Yeah, I think that the advantages of the crypto native VCs, many of which did make their money investing in crypto, and many of which have a curriculum vitae that include founding crypto companies, might be a little bit tone deaf to some of the bigger picture non-crypto impacts on the industry. But they get the technology really, really well. And then the traditional VCs that predate crypto and have already made fortunes for themselves and others and are coming into crypto later, they understand what's going on in the land. You know, they understand what the rest of the world looks like. They're not exactly a fish in water, but I think they also benefit from that context change. So it's hard to say which one's the smart money and which one's not.
Well, let's step back a second and start, since we're talking about essentially what's happening right now. If you were to look back on 2022, let's take FTX off the table, as you have. By and large, was it a year in which there wasn't as much widespread carnage as we might think at this point?
Well, when we're talking about VC investment in a space, it's hard to sort of measure carnage because they are thinking on the 5, 7, and 10 year
long-term investors, right?
So the data that we're really looking at is just the investment made. 2022, I think if you take FTX off the table and you compare it to past years, it was a slightly above average year.
Let's talk about where we are right now. We're in January of 2023. What is the landscape looking like? You've just spoken to a lot of VCs, both, I'm sure, crypto VCs and others. What are they saying? Is there optimism, or is there sort of like a wait and see?
I was expecting a lot of pessimism. I'm working on an article right now that resulted in me getting on the phone with a lot of VCs and trying to get the lay of the land out there. And I kind of forgot that they're thinking on the 5 and 10 year time horizons. They've seen, many of them have seen bear markets and bull markets for a decade plus in the crypto space. They are concerned with what's going on, but they do not see it as reflective of the technology itself so much as good old-fashioned fraud and bad management. So I was really surprised to hear a sort of like reevaluation of their portfolios and how much they're going to allocate. So one VC in particular had started off 2022 with the goal of investing 20% of their $700 million AUM in crypto. And around the time when the Terra Luna collapse happened, a $40 billion evaporation of value, they sent out a letter to their LPs basically telling them...
This was early last year.
Early last year. We're capping it at 10%. Basically, they took 10% of the AUM they were planning on investing off the table.
That's called today's hero, I think.
I think it is. Yeah, I think it was smart. But what's fascinating is the collapse that inspired that, followed by another collapse, and another collapse, actually got this VC excited about the industry. This VC is now planning on putting back the 10% that it took off the table, and is planning to reinvest into 2023.
What would you be investing in right now? Because give us a sense of, when you're investing in, say, a crypto startup, or are there particular areas or types, or is it there's so many cryptocurrencies out there? I feel like that sometimes muddies our perception.
Yeah, I think it's safe to say that we're kind of getting past what are called layer one investments, which is a fancy way of saying new blockchains altogether. I think there's a lot of skepticism in the VC community of teams that are claiming to build a better blockchain, especially because blockchain technology is open source and it's constantly evolving. The teams that already exist that have raised tens of billions of dollars total can simply evolve their existing project into a better blockchain. So we're not going to be seeing very many investments in the new better blockchain. But what I do think you're going to see are what they call layer 2 solutions, which are, we'll call them like a meta blockchain that sits on top of the layer 1 solution.
So the foundation is set, and this is what do you do with it, basically?
Well,
like
so there's actually a layer between that.
Okay.
So no, SaaS is actually a good comparison, I think. So software as a service. These are like one of the most famous ones is Bitcoin is a notoriously slow blockchain. It closes about every 10 minutes. And I think last I looked, it was doing about 7 transactions per second. That is not enough for a global financial infrastructure. So a layer 2 solution called Lightning was built to go on top of it. It still integrates directly with the Bitcoin blockchain, but it settles in real time, and it can handle much higher transaction volumes. Now, you can do all kinds of different stuff with these layer 2 solutions. You can have layer 2 solutions with built-in community building software. You can have layer 2 solutions that integrate the founding blocks of companies. And these blockchains, the layer 1 blockchains, are now seeing investment in layer 2 solutions that are sort of like moving problems that entire groups of people have into the protocol layer so that everybody can share in the benefits.
So what kinds of problems and what are some of the names? We don't recommend any investments here. And of course, when we're talking about VCs, it's a different route in. It's not a retail investment kind of solution. But are there particular companies that are emerging or particular solutions that are most enthusiastically embraced?
I will say that there's a name that I'm seeing frequently mentioned in the headlines right now, Polygon. Polygon seems to have a really winning combination of technology and team. And we're seeing them not only getting some pretty impressive contracts, but providing some really new functionality that is getting
what do they do?
Early adopters. So they're helping companies build with blockchain. They're one of these companies that are sort of integrating some of the functionality that is common amongst all institutions into the software layer itself. And they're kind of shortening the time to create new applications by integrating it into the blockchain itself. So this is what I'm talking about, where the layer 2 stuff is frequently just the next step towards actual tools. The applications themselves are being built on top of these layer 2 solutions. So you're seeing institutions, both old institutions from the pre-blockchain world and newer institutions that are crypto native, as we've been saying, that are building tools directly on Polygon. So
let me distinguish between crypto and blockchain. I mean, because what you're talking about to me immediately sounds like a blockchain solution that may have nothing to do with crypto. Forgive my ignorance on that, but is there a way you would distinguish it, or do you see this all still being in the crypto space because ultimately it flows back to that?
So it's very difficult, and some people would say impossible to separate the two.
Okay.
I think that one handy way to think about that. So the internet itself, though it does not by definition need any big companies to power it. In fact, it survived just fine for decades before Amazon Web Services, before Microsoft Azure, before all these big companies got in with their powerful computers. But there's a lot of money to be made by bringing that functionality underneath these giant institutional umbrellas. There is a possible future where those services are performed on laptops instead of in cloud servers, where the simple act of turning your computer on is a tiny act of supporting the internet itself. But there's a lot of resource demand that Amazon, Microsoft, and others have put into creating these services. And there's a lot of reward that they're getting for doing that. And so the question then becomes, if you're going to have an internet without Amazon, Microsoft, and all these giant tech companies powering its backbone, what is the incentive for you to download that software into your computer and become a part of that process? Frequently, the answer to that question is cryptocurrency. So these computers, similar to how Bitcoin exists because computers that audit the software are rewarded with cryptocurrency, this internet infrastructure without big companies would exist because of a reward that it is paying to people.
So it's another way of democratizing, basically, the process. And one of the things that's interesting, we got to a period where it was a battle of the titans, and it felt like it was Amazon's world and Google's world, and we lived in it. I think maybe we're getting past that. How much space is there for innovation, new players, startups, in essence, in this space right now? FTX has exited the scene. Is this a space where we're starting to see the consolidation around new behemoths, or is it really still a bit of a Wild West where there's a lot of room for new players?
The fact of the matter is there's definitely consolidation, and a lot of people have issue with that. Interestingly enough, that actually comes back to the VC question in the first place. The consolidation is happening in the bank accounts of these VC firms. Andreessen Horowitz raised a $4.5 billion fund. Paradigm, a crypto native VC firm, raised a $2.5 billion fund. And they've been deploying $300 million rounds, $100 million rounds, $100 million rounds, $50 million rounds weekly for a while. And in exchange for their investment, they are frequently getting tokens that are the same tokens that I'm talking about here that could be used to power decentralized versions of the internet. Which is to say that maybe the companies themselves aren't going to become like the Facebook of crypto or the Google of crypto, but sadly the VC firms are going to be these behemoths.
So let's talk a little bit about some of the more innovative strategies too, because we've seen very visible evidence of strategy number one. Are we seeing more innovation in terms of tokenization or other ways to be structuring some of these investments that might take advantage of?
Absolutely, yeah. So these crypto companies doing a wide variety of services are actually increasingly using the tokens themselves as securities. This is completely different from the early days of the initial coin offerings, where companies were raising hundreds of millions of dollars by selling tokens on centralized exchanges that ostensibly were going to be used to power some component of their application in the future, but ended up having very little functionality and were in fact securities. In spite of all the PR that they wanted to spin and all of the confusion that they seem to have sought to create around whether or not these tokens were securities, they were in fact securities. And the SEC has been going after those early companies, not all of them, but many of them, because the tokens that they were offering were securities. So this new breed of crypto companies is really just owning that. They're saying, listen, the innovation here isn't the ability to raise capital without securities. The innovation here isn't to evade security regulators.
Right.
The innovation is a new type of security, right? A new technology to create these securities. And so the VC firms themselves now have wallets, or to use a more traditional term, an account, so to speak, where they're holding not just Bitcoin, Ethereum, USDC, a stable coin, but they're actually holding securities that were built from the ground up to be securities. The companies have decided they want to play games. They don't want to play games. They want to do business in the United States. They want to comply with regulators. They are frequently hiring third-party specialty firms that do nothing but create these tokenized securities and creating a million, 100 million tokenized securities, and their investors in exchange for their old-fashioned capital are getting these tokens.
Which brings one thing to mind. Is there any sense with FTX or others that a welcoming that this perhaps has accelerated a maturity in the industry? Because we are seeing regulatory interest. I mean, there's investors like some degree of stability.
Yeah.
And so when we look at what's happening going forward in 2023, I'm curious what VCs are saying about some of perhaps the welcome consequences of the chaos we saw in 2022.
Maturity is an interesting question to use there. And I hadn't really thought of it that way, but I think it's specifically in this instance, what we're seeing is the VCs have kind of like turned their attention away from deploying capital and sitting and waiting to actually using the technology. And as you were asking the question, like, yeah, actually, I think that is a sign of maturity. Not only are the companies themselves sort of accepting the reality of the world that they live in, where there are securities regulators and issuing tokens and raising capital using tokenized securities, but there's even some early evidence of the VC firms themselves that are tokenizing the fund. And so typically, these firms have funds that are designed to close in 5, 7, 10 years. And there's very little opportunity to get your money out, and realistically, almost no opportunity to get your money out before the fund is closed. These VC firms that are tokenizing the funds themselves, they are giving their LPs tokens that represent their investment.
Which can then be traded.
Those LPs can then trade their tokens, their stake in the fund with each other. These are also created from the ground up to be securities.
It's almost like a second market type of approach,
It's a second market where LPs can trade amongst themselves. But interestingly, they don't actually have to ask for permission. Like you do get the permission because you can only trade with other LPs in your fund. But you don't have to call anybody up and say, hey, can I move? I've had this thing come up. I need to get my $20 million out. You can just give your $20 million worth of securitized tokens to another LP.
So let's step back as we end, because not all of us can get a piece of Andreessen Horowitz and get in. But we do look to them to see where are they investing, and it helps to incentivize, what we pay attention to. What would you say if you were to get a sense of watch this space in terms of, you mentioned that second layer, you mentioned Polygon. Yeah. Anything else you'd say in terms of where you're seeing enthusiasm and where we're likely to see more action?
Well, I'm really excited about tokenizing the fund. You did talk about the fact that most of us aren't going to have access to these investment opportunities, and that's
Nor would we if we could, of course.
Of course. As reporters, never. Yep. That is not sarcasm. But this is actually lowering that threshold. So one of the firms that is tokenizing its fund is actually opening up investment to as low as $10,000.
Wow.
So if you have $10,000, you can now buy into a very, very sophisticated VC fund.
Like
you can
VC
gain
for
that
the
exposure.
Masses.
VC for the masses. If you're not in the United States.
Oh, okay. Thank you, Gary Gensler.
If you're in the United States, you do not get access to this investment opportunity because it is only open to what are called accredited investors. And accredited investors have to basically already be rich.
Have $1 million net worth, right?
By most people's, $1 million net worth, or I think like $200,000 revenue a year. If you're married, I think it's $300,000 revenue. Income. Most Americans don't qualify to be an accredited investor. Even if they had the 10,000, they would not be allowed to buy into this. But
it's a sign that this is a space that people can get into.
It's a huge sign. I think it's very exciting to see people with much more accessible dollar amounts getting access to VC funds. And there is talk about changing the definition of an accredited investor in the United States. And believe you me, if we start seeing hundreds of thousands and millions of investors putting $10,000 into VC funds outside the United States, there will be momentum to get that definition changed so Americans can participate.
I totally believe that. Well, thanks. More to come. Thanks, Michael.
Thank you so much.